But I want to get right into this because we've got a lot to discuss today. So, Derek Goulette, welcome.
Thanks for having me here.
My pleasure. So, the magic number that I think a lot of us have seen right now is 6.19. So let's break this down. Let's talk about it. And I want to talk about the impact, of course, to buyers. I want to talk about the impact to sellers. And so let's kind of first start with this. Let's take a little bit of a trip back in time.
Yep.
Tell us where we were this time last year.
Ooh, that's a good trip down memory lane. So last year, this time, we had actually rates below 3% on any product you were getting out there. Jumbo, conforming, FHA, VA loans, all sub 3%. So it felt like a nice, fun party.
Right. Don't be upset that it's over. Be glad that it happened, right? Isn't that the saying?
Yes, exactly.
And so here we are now. We're seeing news of it being basically 6.25, close to it. But that's not necessarily the actual interest rate that people are paying. So can you expand on that just a little bit?
Yeah. So when you see a lot of these published numbers, what they are is they're kind of like industry averages weighted across everybody, including all the different credit scores out there. So when I say things like that, what I mean is different loans out there have different credit score charges. So government loans, for example, really have no credit score charges, whereas a conforming loan, which is, I won't try to get too deep into that, each different 20 points of credit score have a different charge associated with it, which drives interest rate. Does that make sense?
It does. Yeah. And it's complicated. There's a lot of math that goes into determining your interest rate. What are some of those things, out of curiosity, just for folks that are listening?
So really, credit score is the biggest one that drives interest rate in a conforming loan. And so, for example, between 701 and 720 is one credit score bucket. 721 to 739 is another. 740 and over is another, and so on and so forth. And so that's the biggest driver of credit of interest rate in a conforming loan.
Other factors being how much money you make, how many debts you have, how much down payment you're going to put down,
so
loan product, so on and so forth.
Down payment, loan product, yes. It's not really driven by debt to income ratio as much as people would like to think, unless you have mortgage insurance, because mortgage insurance is assessing the risk of you defaulting. The higher your debt to income ratio is, the more likely it is you default, again, historically speaking, and that means that the mortgage insurance element of this is more expensive.
So I'm going to switch gears just a little bit. So one thing that we're doing on our real estate team right now, which I think is vital, and anybody out there looking at homes right now, actively looking, they need to be doing this with their lender as well. I am having every single buyer we're working with, but by the way, we have like dozens and dozens and dozens of buyers that my team are working with. And a lot of them have been looking for a while. They're making offers. Some they're losing. It's still a very competitive, very high velocity environment in our market. But with this increase in interest rates, which has happened rapidly, I mean, where were we at the beginning of the year?
Like 3.25-ish.
And now we're at
like 6, 5.75 to 6.
Unbelievable. And so a lot of people are still searching in the same price range, when in reality, they can no longer afford the homes that they're looking at.
Or they don't want the payment associated with it.
Right.
It may not be that they can't afford it. It's they might not want the payment associated with it.
Yeah, and could be both, right?
Yes.
But let's talk about the impact on purchase power and payment and income replacement that would need to occur in order for things to feel the same to a buyer right now. So can you walk us through that?
Yeah, that's a perfect question. Actually, I brought some notes. And so we'll just talk about like a few different examples. So I used an FHA loan at a $350,000 loan amount, which is like a $365,000 or so purchase price. You know, fairly healthy amount of money to spend in today's environment. And if we go back to December, that payment was roughly $1,850.
Okay.
Today, that same payment is $2,525. Again, roughly speaking, about $675 a month different in payment.
Is that total payment including taxes and insurance, or is that just principal and interest?
That's taxes and insurance and everything.
So that's whole kit and caboodle.
Yeah.
Okay.
So in order for that payment to feel about the same from an income perspective, you have to make $1,000, about $1,000 more a month to have it feel the same from a cash flow perspective.
Gotcha. So a lot of people listen to this show, and we're talking with Derek Goulette of Finance of America. A lot of people listen to the show to, of course, get an understanding of what's happening in the market right now, right? They also want to understand, if I'm going to be a buyer in this market, what should I know? If I'm going to be a seller in this market, what should I know? What should I expect? If I'm going to do both, sell and buy, then we got a lot to discuss. But I want to hear from you. What would you tell a buyer that is looking to buy a house right now?
I would actually tell them, at the end of the day, it's still a really, really great time to buy. And here's why. Rates are still historically low. And what I mean by that is, if we even go back, into the mid 2000s, rates were in the mid sevens.
Yeah. I mean, 5%, 6% felt like a deal 10 years ago.
Yeah. And so, rates are still relatively
more than that, but
rates are relatively speaking still very low in the grand scheme of history of mortgage rates. Now, I know that a lot of us have very short memories. We're like the goldfish. We swim around for 5 seconds and we forget what happened. But the reality is if we look at historically speaking, rates are still relatively low. There are other options. There's things to make them affordable, in the beginning of this transition period while rates are rising. There's some unique and interesting products out there for those types of scenarios. But all that to say, prices, I think, will continue to rise, maybe not at the same pace that they have been. So you are still protected from an equity perspective. Number one. Number two, it's still relatively speaking affordable. And number three, rates are still really good.
Right. The way that I've been helping people kind of understand this and wrap their head around it is, so those of you that drive on 26, right? Let's say we're heading up to 95, that stretch of 26 where it's just like the Wild West.
Yep.
You can go 100 miles an hour and everybody else is too, and it's relatively speaking okay. So we've been driving like 95 miles an hour down the highway for kind of years at this point.
Yeah.
And then all of a sudden, a cop pulls off, and now you're driving with a cop, and you've got to slow down to 70 miles an hour. And you feel like you're driving at a snail's pace, when in reality, you're just going the speed limit.
Yep.
I think that's exactly how a lot of people feel. We get used to our environments, right? And anytime there's some sort of rapid change, especially when it comes to things like the media, and I understand the irony in that statement, right, given the fact that I have a radio show, but people always want to shake you into a decision. And remember that, humans are geared to do one of two things for the most part: run toward pleasure or away from pain. And so we have a lot of pressure-based selling in this industry. We have a lot of fear-inducing news that causes action. Everybody always wants to create urgency in everything they do. That is marketing, right?
Yes.
I think the reality is demand for real estate is still fundamentally strong.
Yes.
People are buying homes for the right reasons. Now, compare that to 2006 to the beginning portions of 2008, where people were highly speculative, and this is the kicker, most people were getting mortgages with stated income, stated asset, documentation. I'll just tell you how much I make. How's that sound for you? Can I still get a mortgage? Yes, you can. Oh, and by the way, I know the appraiser too, so don't worry. We'll get you in that house. Not a big deal. And so we do have fundamental differences between then and now. But I think what has happened as a result, I think we still are feeling a little bit of the bruises from the housing crash, even from 2008. I mean, we still kind of have a little bit of that left in our mind. Yeah,
scarred mentality.
Yeah, we've got a little scar tissue from that still.
Yep.
But I do want to talk about the importance of the relationship between the agent, the lender, and the buyer. Because here's the reality for those of you that are listening. In our industry, in real estate, especially as it relates to sales, there's this kind of preconceived notion that whenever we suggest a buyer talk to a lender, we're kind of trained to believe that as soon as we ask that buyer to take that step, that buyer's going to take a big step back. They're going to say, whoa, 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 whoa. Hold on. I'm not ready for that yet. Why are you trying to push me down this path? Why are you trying to put me on your conveyor belt to process me as a transaction? And so I want to set the stage for that. I think that's how a lot of agents feel, and at times that is how buyers feel. I want to shed some light on that, and we're going to do that right when we come back. But before we go, Derek, tell us how people can get in touch with you if they want to talk to you.
They can reach out, call, or text. Phone number is 949-280-8044. That's 949-280-8044. Right on.
And guys, if you want to reach out to me, if you have questions about the market, you're thinking of buying, selling, investing, becoming an agent, or if I can just be of help to you, the number for me is 843-800-0065, 800-0065, or listingsincharleston.com. Stick around. We'll be right back of the Brian Beatty Real Estate Show on the Big Talker, 1250 WTMA and WTMA.com.
Hear the Brian Beatty Real Estate Show every Saturday morning at 9 and each Sunday morning at 10 on 1250 WTMA and WTMA.com.